gold could take a dump if we have complete disinflation or deflation, full-blown deflation. It can, short term. What I'm seeing at the moment in terms of the relationship on gold, I said I would also go and have a look at gold divided by oil. So let's go and have a look at that one as well. We go gold, let's get the right one, Oanda, and then US oil. I want to show you this relationship, and I want to say to you, why long run in 3 years' time, for me, the gold will still have outperformed what oil has done. So let's have a look at this chart. You can see how it's changed since there. I just want to keep that super spike out of the frame. Let's just make sure we've got the right gold. Oanda, that's the wrong oil. Let's get the right oil. There we go. Let's have a look. You'll see our drawings on here. And let's have a look at this to check in with you. So what's happened? A big reversal. You were at 14 down here. You made it to 85.8. We had a structural reversal. You can see the basing ascending grind line of this channel changed violently. Big reversal. You bounced amazingly on our targets, which were 52, which were made over here. Note how you had the most meaningful pullback before that after running our targets. Then you had small pullbacks. This is the biggest to date since this move began. But I will also show you that you were as low as, let's get you a number on that, you were as low as, and now you are higher, despite the news and everybody all being on the oil trade. Let's get that price label for you. The low was 43. So you came from 85 down to 43, and you're actually back up at 59 right now. So I'm not saying plunge protection, whale in back on the gold relative to oil trade. But what I'm saying is, having made this target, it wouldn't shock me in the future. Whoops, we just keep that wick out the way. If we had a winding up setup and we ended up in the long term, this will take a while to happen, going higher. Gold never traded zero. The cash market in oil. Oil is a commodity and it's consumed. There are many people that are conflating gold and oil as the same thing, because they'll show you a long-term chart and they'll say, look, when gold went up, oil went up too. That's called inflation. That's called debt. That's called debt and fiat debasement. You will see there's quite big differences in their performance, but they look the same if you put them on a log chart and you do a big enough scale. There were periods when the oil went sooner, topped out, and then gold went much further. There are periods where gold went first, but they generally are all broadly going up at the same time. It's very easy to say, you can see they're all the same. Gold never traded zero, friends. There's nothing they can engineer that will see gold trade zero. There's nothing. The central banks will be buying it. Everybody will be buying it. It didn't happen. Oil is a consumed commodity. Gold is the longest in existence monetary metal that transcends all fiat, all derivatives, and all proxies for money that they've ever brought to you, and probably goes well beyond 3,000 years, may go 12, maybe 15, who knows? We can only guess. I'm not going to pretend to know. And has deeply unique properties and is not oil. The fact that when fiat debases, both will go up at varying degrees and percentages is not to say that in the end of this 1913 Fed creation cycle, for the entire of the American monetary system, when they created the new banking cartel in America officially, right the way through to this debt crisis, people will look and say, oh, we've typically been around 20 or 40 and try make it a normal range for it. This is a relationship I expect to continue to expand. And as you do more batteries, as you do less humans and depopulation, and as you do greater wealth by an insider cartel, you will have a degree of expansion in the relationship between these. So in the long run, I don't expect this relationship to go back to 14, and even going back to 28, I would treat as a very aggressive gold buying opportunity. My default scenario is, in due course, this will turn into potentially upside continuation, despite it looking like a key reversal now. I think this is a much longer, more dominant trend. You've gone from 14 to 85, a pullback to 43 on the most extreme They've just engineered a shortage in the most extreme place of chokehold. We should have gone to 250. Oil should have gone to 300. Really? Shouldn't it? If there's no ships going down Hormuz, we should be going 300, 250, 300 already. That's not to say we won't do in due course as this gets worse, but I'm just saying the entire setup is absolute. You're talking about the pain point. You're talking about the throat, the stranglehold on the throat of the entire global structural system, because we all buy stuff from Asia. We all buy stuff from Asia. If they go and get to make stuff because the input costs are too high, how does it long run not become all our problem? It is all our problem, and the scale of this hasn't been captured in the oil market. What is the oil market right now? Well, we'll have a look because we're getting some alerts on it. I think it will have another go at running up in due course. I don't think this is the only part of what we experienced. This is a break of a falling wedge. I expect it to go higher, by the way. And I do expect it's possible that some of those bigger numbers I've mentioned can occur. But the fact is, my shock is, why has it not happened already? Almost. How much time does it take for people to really truly understand the scale of this if it continues? So I think you might have a chance of a bottom here at some point and further going up. And short term, that's negative for gold because they are being seen currently as competing for safe haven. They're being positioned as adversaries for competing as safe haven. In other words, the world is treating them as if they're the same thing. So we will potentially go long again on oil. I'm very glad we took profits on this into the Sunday open here. You can see how that gap closure, despite this beautiful little fractal HVF, which we discussed on the weekend with the community, how it would go. And we were watching the weekend markets. I was very happy to be out up there. Look how low it came back, 76. But you may find you could get some form of structure that sees you going up again. So I'm not saying it's over for oil. Oil is going, and it could go a lot higher. And if it goes a lot higher, it's possible for now, given the framing, that the capital is competing for gold allocation versus oil allocation. What do you buy in fear of debt debasement and monetization? You've gone from, I buy gold because it's a monetary asset and it will hold its value, to, hold on, do I have enough oil in my borders as well? We warned on this channel that there will be money moving to the Middle East, but avoid being one of those millionaires rushing to Dubai. That Singapore would become the acceptable face of the Southeast Asian complex, and in the long run, they will be winners. We have seen people reallocating resources from Dubai to Singapore. I will show you the tweets that have come out organically, called on this channel many, many times when we say leave. We are not fans of Dubai. Why wouldn't we have been fans on Dubai? Well, anybody who did the research, which most don't do, when you have a look at Dubai, would have come across the following. I'm going to skip forward in this document because we're jumping around all over the place, but I want to get to Dubai as part of that. Dubai is 90% immigration. The emerging bolt hole for UK millionaires. There are 0.32 million. That's a cheap and easy way of saying 320,000. 8% are Emirati nationals. Expats and immigrants are 92% of the Dubai population. That is 3.68 million. That's right, friends. Food and supply logistics, they import 90%, between 80 and 90% of food needs. Limited local agriculture, you can imagine, it's a desert. Castles in the desert. Key vulnerabilities, global disruption, shipping delays, geopolitical risks, and price fluctuations. Well, what are you getting right now? You're absolutely, and by the way, these food and imports come in on sea and air freight. What's happened to sea? Well, you understand what's happening to sea, and you also understand flying massive carrier planes over a war zone is also not a very safe thing when the drones are out, requires massive danger pay, and will push costs up immediately. So that is what's happening in Dubai, and that's part of the reason why we said we don't trust Dubai at all. So back to the document. It's a government debt collapse. There is the everything assets bubble. I'm going to come back to AI. And the planned demolition agent, the fire starter of the war price, is the petrodollar experiment, which is unraveling, and for which America, that cheated in the 70s, and the big winner was gold, stagflation, gold, yes, the big winner, stagflation and gold, and led